So how did I take my win rate from 30% to 100%? I know this sounds scammy, but I promise you I don't have a pink Bugatti to flex on you. This is my current data for 2026, and if I account some trades of December, you can see it starts to get realistic. This is just because I joined TradeZello quite recently. Now, for whatever reason you're looking to increase your win rates, you gotta also understand that having a lower win rate doesn't necessarily mean you're unprofitable, because risk reward and win rate combined is what's gonna calculate someone's profitability. But there's one metric a lot of people often forget about, and is the trading frequency. Now, this is the trading trifecta, and both your risk reward and trading frequency are going to have a direct impact on your win rate, and you're going to have to adjust these metrics to your liking. So assuming that your trading skills are a liter of water, you're going to have 3 cups, which you're going to have to choose how you'd like to distribute that water. So let's say you want a high win rate. Well, you got to put a lot of that water inside of the win rate cup, which is going to mean the other 2 will have way less water. Now, I know every single one of us would like to have all these 3 cups filled to the top, but we got to make sacrifices somewhere and adjust it to our liking. Some people would prefer a high risk reward. So you put a lot of your water inside the risk reward cup, which would mean you have less win rate in your cup. Perhaps less frequency. And of course, you can always add more water to your base. You just have to increase your knowledge, increase your skills as a trader. And stay with me, because I'm going to explain why these 2 are going to have a direct impact on your win rate. So if we start off with the risk reward, which trade here do you think is more likely to hit TP? Is it the 2-hour trade or is it the 10-hour trade? It's obviously going to be the 2-hour trade, because it takes way less movement in order for price to reach the target. Whereas with the 10-hour trade, well, it takes way more movement and it's way more likely for you to get hit on a stop loss. So going for less risk reward would mean more win rate, and going for more risk reward would mean less win rate. Now, going over the trading frequency, which trader here do you think has the highest win rate? Is it the trader that has 10 trades a week, or the one that has 1 trade a week? The one that has 10 is obviously more stressed as he's trading more and is going to receive way more losses, whereas the one that's trading once a week is obviously going to be way more calm. And when I say trading frequency, it's not just about the number of trades that you take. It's also a synonym for the quality setups. Because there's not high quality setups appearing every single day. You might even be a scalper and take a lot of trades per day, but even then, you know that there's some days where there's way better setups than others. So the same thing happens here. The less trades you take, obviously the more win rate you have, and the more trades you put, obviously you're gonna have to endure a lot more losses within those. So less of a win rate you have. In trading, you all know that less is more. So now that you know that by changing your risk reward and trading frequency, right, these levers right here, if you move them up or down, they will have a direct impact on your win rate. You have to also account your psychology. Now, what I mean by this is that your data might be telling you to do something in the live markets which you're not totally capable of. Let's say that your data tells you that the best way to trade your strategy is to go for a 20-hour risk reward, which will only give you a 10% win rate. But within 10 trades, you're expected to make 11R. And then you have another way to trade the strategy, which is simply by changing the risk reward from 20 to only 2R. But that change will automatically increase your win rate to 40%. And now across 10 trades, your expectancy will be a plus 2R. Now, obviously 11R, it's better than 2R, but are you capable of enduring losses after losses as you have a 10% win rate? Right? You're going to see a lot of losses coming from it. And are you able to take all of those losses and still keep a sane mind to be able to get that 20R win? All right? Because it's pretty hard. It's pretty hard to go to a lot of losses, still keep the good mentality to wait for that big winner to pay it all off. And also understand that data results will not always reflect into the live markets, because psychology gets in the way. You might miss trades. You might be on holidays. Some days you're more confident. Some days you're more fearful. In backtesting, there is no emotions. So although you might try to go for this best results metric, you might not even be able to do this 11R. Maybe you just stay at -9 because of how difficult it was and you didn't manage to capitalize on that winner, or perhaps you missed it. Whereas here, you could have been at a 2, and it ends up being way better for your psychology since you're winning way more. And the same is applicable to trading frequency. Let's say you have an 80% win rate, which is amazing, and going for a 2R, you're expected to make 15R within 10 trades. But that will only come within a year's time. Since the trading frequency is so low, right, you're able to wait for those A-class setups, A++++, that will increase your chances of winning, giving you an 80% win rate and these results. Now, let's say, in contrary to this trader that has a super low trading frequency, someone that has a higher trading frequency might be trading with a win rate of 40%, going for the same 2R, right? But because they're trading way more, their win rate is cut in half in comparison to this trader. And across 10 trades, they only make 2R, which is way more inferior than this 15-1. But they get it in a month's time. Now, this is very key here because this guy makes 15 within a year. If this guy is expected to make 2R within a month, that means by a year, he'll have made, well, or to be expected to make 24R. So you can see how now this becomes way better. And then the same argument can be made, as I was saying previously, where you can miss trades, where psychology gets in the way. And obviously we want to adjust it to our liking, because some people want to trade more than others. It isn't so healthy for us to be trading a lot, but it isn't so healthy for us to be super disconnected from the markets. So what I did with my trading to increase my win rate was to pull the frequency lever. So I took some water out of the frequency cup and I pour it into the win rate. Okay? So now the win rate has increased and the trading frequency has decreased. Meaning I disregarded all the risky setups and I'm only looking now for A-class setups. And the reason I was looking for risky setups is not because I'm a dopamine addict. It's just because I was willingly putting myself more at risk in order to trade these risky plays that could eventually give me more wins. Same thing as I was talking about here. This guy looks for A-class setups, right? Where this guy might look for A-class setups and B-class setups. So then he's trading way more, but he's sacrificing his win rate in return. But this change can also make you way more returns and give you a better peace of mind. And here, my win rates stay the same at 3R. Now, an analogy that I want to give you is to imagine each trade as a bullet, right? And a lot of people talk about being a sniper in the markets, right? You might predict the absolute lows, absolute highs when it comes to a position, but it goes way deeper than that. So imagine each bullet as a trade. You know that submachine gun holds about 30 bullets in this clip, right? I don't know, I'm just making an assumption here. I used to play Call of Duty. But the sniper only holds about 5. So right at the bat, there's a major difference here. You know that one shoots way less than the other. But there's a precision factor into it. Because although there's only 5 bullets here, you know that the accuracy is way better than this submachine gun. Because a lot of you are trading with a submachine gun. You're just coming to the markets and spraying, right? And you know there's recoil, it's not that accurate. You shoot your whole clips, some bullets might land in your target, majority don't, and you best hope the ones that do end up killing your target, because each of these bullets costs like 1R. And 1R isn't a lot, but as me and you know, you take 1R here, 1R there, 1R there, you know, you end up blowing your account. Whereas with a sniper, you're not too worried if your shot is gonna not kill your target, because you're gonna put accuracy into it, and you know this caliber bullet is definitely gonna kill him. And even whilst being a sniper, you're not gonna see your target here, which is a winning trade, and immediately shoot him. Like, he's still moving, he just appears, boom, you take your shot. You're gonna shoot too early, meaning you enter the markets too early, you're gonna get stopped out. Your target's gonna look, he's gonna see you, security's gonna get in the way, boom, you missed your shot. But if you're a real sniper, then You've got patience. You're breathing. Taking it slowly. Make sure your target sits still, right? It's in a good zone. And you take your shot. You land your shot, headshot, you kill the guy, you get the money. You know, in comparison to trading, right? I'm not a killer, FBI, chill out. And the result, well, you end up passing accounts in one single trade due to the precision. If you want to know how I got this challenge pass within just one trade using the same principle I'm teaching you here, I'm linking the video here so you can also watch it. I hope this video has had a positive impact in your trading, and I'll see you on the next one. Godspeed, brothers.